Okay, what's going on, everybody? It's your Saturday Sweep webinar here with Lucci and Wall Street Jesus. Today we're gonna take a step back here from actual, trading, order flow, stuff like that, and talk a little bit about emotions. While you're trading, how to control them, and just recognizing when some of these things, your emotions are affecting your trading decisions throughout the day. There's a lot of traps that are set in the market that we like to call them, and usually this comes with trying to catch a reversal or trying to play the right direction in the market, and you often get chopped around sometimes, and you miss the big picture. Pre-market action too is very sort of manipulative. There's low liquidity, light liquidity in the pre-market, so it's very easy to push the markets around. So most of the volatility and everything is happening, in the overnight sessions with ES. So sometimes you'll often wake up to a 15 handle gap down or a 20 handle gap down or up, and most retail tries to chase the trade or chase whatever happened in the pre-market. And they get, they get crushed pretty quickly here, and we see it pretty often too in our chat rooms as well as, across Twitter as well. Jesus, care to comment here a little bit on, some of the traps you get into with the bias that sets in. So let's talk a little bit about bias here. What do you, what are some top things that you would say you notice from a lot of traders with their bias?
Yeah, and you know what it is too, Luigi? I think it's the time we're in, and call it whether the machines, the algos, the dark, whatever name you want to put on them. I think now more than ever. Okay, I've been actually in this game since 1997. Okay, and I don't remember it like this to this extreme where um, in other words, where everybody feels one way, the total opposite happens. You know,
Right.
everyone's wrapped up into every tick.
Right.
When the market's going higher, everybody wants to own everything. The market ticks lower, everyone wants to sell everything they got and short. You know what I mean? So I just think now more than even when I first got into the game, I notice it now more than ever, where some, you know, unseasoned traders, retail traders that are new to the game, even just coming in and thinking they can short a top, which is one of the hardest things to do in this game. So
Right.
yeah, I notice it a lot.
Yeah, and we can take a couple examples here just to throw something out here. I mean, pre-markets here for Friday's trading session here were very weak. We had the jobs number that came out, and we flushed completely on the news. And then just that alone, especially with how the market has been trading and how some of the order flow has looked, things have been more or less bearish, but we're not really getting that panic sell at all. You got a little hint of it here off the jobs number. We dumped 10 handles, so most people are coming into the day expecting us to trade lower, We got a monster squeeze off the open, faded it out completely, so now even more so, most people are now looking too short, and then some of that selling momentum just kind of disappeared. And Jesus, you want to throw out and explain a little bit about how some of the order flow helps you to stop, that bias or preempt that bias. And that's kind of what we want to be able to do in the room is preempt whatever bias that you might have that is more or less controlling your emotions, controlling your trading decisions. I'll talk about some, disaster scenarios that I went through. But Jesus, can you comment a little bit on how the order flow helps to preempt some of that bias?
Yeah, without a doubt. And you know, because I talk about it a lot as well as to members in the room, so they're familiar with it. Honestly, guys, I'm being dead honest with you, okay? I can lie to you and tell you I'm some superstar trader and I'm some stock market aficionado with 20 years experience. Without the order flow, I'd be lost in space out there. I really would. And Lucci just showed you an example where, you know, things line up, everything, there's not one reason for us to go higher. Okay, they take down this market with authority, but realistically not much volume behind it.
Right.
And then all of a sudden a buy program comes in,
Yep.
it retraces that whole move lower, and then guess what? It fades that whole move higher. So I mean, you know, you're getting yo-yoed back and forth. Now with, you got CNBC, Twitter, the internet, you have noise all around you. So that's the main thing to me. You need something to keep you in check, okay? Because I like to say we all have that degenerate blood, okay, that degenerate gambler blood. And when it comes to this stuff, trading every day on a daily basis, that's the worst thing to have, okay? Yeah. It's a gift if you don't have that. But you need some sort of game plan to keep you in check, and that's what the order flow provides me. In other words, I'll give you an example. If we're moving higher and the order flow doesn't confirm that, in other words, there's not any significant call buying behind that, or the flow is not bullish, I'm not participating in that move higher.
Right.
Okay? And again, even though the market's going higher, I want to get involved. Basically, I'm to the point now where I'm so disciplined because I just use the order flow. If there's nothing to buy, if the order flow is telling me not to buy anything, I'm not buying anything. So that's where the order flow would keep me in check, and I need that. Otherwise, I'd be chasing everything back and forth and spinning my wheels going nowhere.
Indeed, indeed, and I would add to that is that whenever you have gaps or significant significant daily moves here on the SPY, usually you're going to get some kind of several fake outs during the session where anybody who is chasing that gap, you might be in the money there for a little bit, but it's going to stall out and you're going to get squeezed or you're going to get faded either way. And this is what happens very frequently in the markets. As you can see, all these gap downs that we've had, we had 2 in a row, more or less retraced at some point and then offered up not much intraday activity where most of the juice happened overnight. And for options traders, this is the worst. This is the worst thing that can happen. Okay, and I'll tell you why, right? Let's say, we're planning a trade here. I'm planning a trade here on this Google for this particular day, and I'll set up this trade for you a little bit. This name faded off very aggressively after the earnings, as well as most of other large tech companies that just failed off of earnings, right? Netflix saw the same thing, Apple saw the same thing, Microsoft here saw the same thing, and Google saw the same thing as well, right? Posted earnings, faded off the earnings here, and that was a great trade too, by the way, shorting that little consolidation, and then the fact that we pushed lower on the indexes, most of the juice came out of these names, that was a great short. Now you get all this consolidation here. I'm looking for a bounce at some point, right? But, during a lot of this chop, you don't get a lot of sweet opportunities here, to trade into this. And you might, you might get really destroyed here on the call side. And just take a look at these 730s here and how long they just kind of sat around and did nothing, right? And you got to sit around in this chop for a while, and you got to buy enough time on your expiration. If you were in weeklies, the 720 weekly was so bad during all of this, right? It was around maybe 50 cents to $2, and it went nowhere up until literally the last 3 hours of the day that this thing was about to expire, and it went from $1 to about $5, right? So if you were looking for this move for the last 5 days, the only time there was really juice on that option was the last 3 hours of trading. So you got to be able to get some time, work in with this thing, and then finally, when the market sets up, that's when you can go ahead and lay on some risk, all right? But until that happens, anybody laying out risk out here, on the long side, you're going to get punked here because you're going to buy high, $3 on this option and then end up with an option at $2. So anybody who trades options, the gap ups are huge. So let's say we gap up Monday, right? Let's say we gap to, 728 or 730. These options are going to open at, maybe $6. And people are going to chase it, right? You might get a blip up to 7, but all of a sudden you're going to get a pullback on this Google, and these options are going to come right back to 4.5, right? So if you guys are buying way high after and chasing this stuff off a gap up, this is where that bias is really going to hurt you. You know, and this is one of the big things with options traders that they get crushed on, because the gap forces their bias to just get super aggressive on one side of the trade, and that gap is going to get faded out inevitably, either instantly off the open or maybe later on in the afternoon, but that gap is going to get faded out. And if you don't take that profit or whatever you got, you know, and come back on these dips, you know, this is the place where you're really going to get killed.
Yeah, and that's, I mean, that's options too. You know, the one benefit, and it's a large benefit to trading the underlying, trading the stock is you don't have to worry necessarily about that time. In other words, if hypothetically we're using Google, chops around a bit, okay, you're not too concerned if you're holding on to some common. But if you're in weeklies, like you said, you know, that chop could take a toll on the premium. And, you know, that's the major difference, obviously, when you're trading options, looking to trade options and common stock. So another benefit, and again, it's not an exact science. Not every time a name catches an alert it will happen. But another benefit to the order flow, it gives you an idea of when. Okay, so if you're unsure and Google's been chopping around and then all of a sudden some bull flow starts to trickle into Google, that may give you an indication that, okay, this thing might be ready to move sooner than later. Okay, and just that little piece of information alone, even though it's not exact and doesn't have to be right all the time, just an indication of possible momentum can be a huge edge, especially when you're trading options.
Yep, and later on in the session, you know, once everybody flipped bullish, and this thing finally, you know, just found a couple of bids, and juice went back to Netflix, and juice went back to Apple, and the rotation hit finally. You got this guy coming out here, right? So this guy's buying the Goog, the other shares, and he's buying 712.5. You know, so for me, like, I already have my trade set up for next week, and that's pretty much all I'm going to look for. I'm going to look for some of these, you know, beaten down tech names, try to get a dip, and play along. That's it. That's literally what I'm going to do here. Microsoft and all this kind of stuff. So that's an example of a bias. That is an example of a bias. No matter what, like, you're going to have some kind of bias. The problem is that if you don't have a plan for when you're wrong, you know, and this is the difficult part. And bias, guys, it gets stronger as you become more profitable, right? So all of a sudden, if you're up in a trade, now you're attached. You don't even think you're wrong, so you can't even see the other side coming, right? You don't see the train coming, you know, right in front of you. You don't see it until it's too late. Your P&L is gone, and you're now red in the trade here. So, Jesus, any comments here on, as emotions get heavier and your bias gets more attached, and you get more attached to your trade, you know, what are your suggestions here on kind of checking that bias? Is there any way to do it here for you, or do you just rely strictly on a stop loss and just say, hey, screw it, let the stop loss take it?
Here's the problem. Like, you just hit the nail on the head. No matter how much we preach it, okay, and we're kind of being hypocritical here because we're preaching don't have a bias, but us ourselves, we have a bias.
Yeah, anytime you trade, like, you are going to be biased, and that's fine.
Exactly.
But, you know, when you're so attached, when you become so attached, that's when it becomes a problem. Jesus, sorry to cut you off. What were you saying?
No, you're 100% right. That's what I was referring to. We're all going to have a bias. Like, I'll use myself as an example, okay? I always lean bullish, okay? Unless we're in a serious correction or a 2008 apocalyptic style market, I'm always leaning bullish. And what I mean by that is I'm not participating on the short side at all, okay? As crazy as that may sound, I do not participate on the short side. And one of the reasons for it, it keeps me in check. In other words, I sit here every day and I'm looking for aggressive call side sweepers, okay, for me to come up with a game plan and put a trade on. If there are no call side sweepers, I'm not shorting anything. But at the same time, my bullish bias, I'm not forcing a long, you know, a long position. I'm not forcing to open up a long position if the flow is not confirming that. Okay, so it keeps my bias in check. As bullish as I want to be, if there's not aggressive option buyers On the call side, I will not be playing anything bullish. So that's what I mean. Like, you have to have some sort of game plan to keep you in check just in case you're wrong. Because again, my bullish bias can be wrong, okay, but it's not going to cost me money, because if I'm wrong, the order flow is obviously going to keep me in check. Okay, and that's what I use. I mean, you may have something else. I'm just using myself as an example. So to Lucci's point, we're all going to have some sort of bias. Okay, that's the inevitable. But you have to have some sort of game plan to keep you in check when you are wrong. Because when you are wrong and you stick to that bias, that's when you get knocked out of this game. It's that simple. You know, how many shorts are there? We see them every day. And, you know, the shorts are supposed to be the smartest money on the street. You see retail traders on Twitter thinking they're big shots, you know, shorting bull markets, and then you don't see them a week from now. So you have to have something to keep you in check regardless, because we're always going to be wrong, right, Luch? I mean, we're always going to be wrong at some point.
Right. Right, and you know, and let's actually bring it up to you guys here. I mean, what are some of the things that you guys do to keep your bias in check, if you do at all? And why don't you go ahead and let me know, and let everybody know, and we'll talk about it here, and we'll take a bunch of questions and everything. Let's get a little personal here on this stuff. Is that, you know, how often do you feel that your bias takes over your decisions, and you end up holding on to these positions that you're just too mentally attached to? And if so, how damaging is that to your, you know, your emotions, and it infiltrates everything, guys. You know, so if you're taking a good slew of losses because of your bias and your emotional attachment to whatever trade that you're making, and subsequently, you know, you're taking losses, you know, it affects you a lot in trading, because, you know, and I'm going to bring this point up, and let's talk about it a little bit here. And I don't think I sent it out to I think Jesus and I talked about this a little bit, but how many of you guys feel that your self-worth is attached to how much money you make every day in the markets? And Jesus, why don't you kick that conversation off here, man? I mean, do you feel like most traders attach a high self-worth to whatever they make during the day, or during the week, or during the month? And if they don't hit these numbers, you know, it starts just a slew of bad decision making, more emotional attachment, even more bias, that it becomes sort of a trap that you just can't get out of. Have you ever experienced that? And can you throw out some examples?
Of course. Everybody experiences that, and, you know, you see it every day. And another example, you know, my strategy, there are a lot of days where you know, I'm making a small amount of money, a lot of scratch trades when things aren't panning out. There are some days where the order flow, this week is a good example. Outside of Friday, you know, there wasn't much call action. Basically,
yeah, it was pretty shitty. Yeah. It was pretty shitty.
Yeah, so I wasn't doing a thing. And, you know, a lot of people, if they're all gung-ho and think, oh, this market's going to turn, and keep forcing trades and hoping they work out. And listen, they may get lucky once or twice, but it's that one time where you do not get lucky and that thing tails in reverse, and then that really, excuse my French, is going to fuck up your head. You know what I mean? So that's what this game is all about. I mean, psychology is such a big part, emotion such a big part. I'll give you another quick example, Lucci, okay? And you could understand this because we see it every day. How many times we get asked about this? All right, we had bullish flow, again, from the so-called Bazooka Joe lows all the way up till recently. Okay, and then, you know, at the tail end of that, you know, rally, until we entered this little pullback here, we started seeing out of the money September SPY lottos, right? The 210s, then they went to 212s, then they went to 215s. Okay, then right after that, the flow changed. We saw that big VXX call sweeper. We've seen inverse ETF, bearish ETF bets. So, you know, I'm talking to some of the members in the room, and again, people on Twitter and just people I speak to, and I'm a bull, and I'm saying that VXX bet right now is telling us to be careful, okay, to sit on our hands and just relax, take a pause, okay, even though the flow looked bullish, extremely bullish up to now, we have to pause and take it easy here,
right?
Okay, then the market pulls back, and what's the response I get? Well, what about those SPY 215 guys? They're wrong? I mean, you understand? They got so biased and wrapped up into SPY 215 lottos, thinking that we had to go there just because we saw a bet that they ignored what the flow was telling them
Yep.
in the days after.
Yep.
And that's a perfect example of the bias right there.
And by the way, guys, that's how the market works, right? I mean, the market works on trapping trapping people through the bias, through the emotional attachment, and whether you want to believe it or not, that's how all of these moves happen. You know, when there's panic and blood in the streets, to when there's a huge reversal that is setting up. So all of this down move here was just literally to push people in short. We saw Dr. Doom put bets here. Everybody was talking about a huge retracement in the market. We're in a bear market now, and we see the biggest reversal that we've ever seen, you know, in the last 5 years. So the market works like that, right? All the participants are in one direction, piled into one direction, and as soon as enough of these people are in there and you squeeze enough of these people to the wrong side, you know, that sets up the juice needed to really get things going on the other side. And that's just literally how the market works. You get this ebb and flow of market participants that are biased to one side, and as soon as they realize they're screwed and they're not going to get paid out, what do you think is going to happen? You know, what do you think is going to happen? That's when people are going to start taking profits. And you look in the you know, you look in these energies and whatever it is that you're taking a look at, and you're seeing, you know, decent sized pullbacks here. You look at the banks here; these things look absolutely horrible here. You look at pharma. Pharma literally just said, screw it. We're just throwing in the towel. And you guys like Gilead and all these names like had huge buyers up here, buyers up here. And this thing came out with earnings like, look at this. This is bad. That's bad. That is bad. That is really bad. And this is when you get, you know, this is when people just get lit up on that bias. And I'm just talking about from a swing perspective here, a longer term perspective. But this shit happens intraday all day. You know, this shit happens intraday every day with the SPY. We have low liquidity markets, so buy programs and sell programs are out there in force to push your bias one way or the other, and then they flip that real quick. And if you can't flip, you know, this is going to be difficult for you. How many of you guys are quick enough to flip when you see a reversal headed in your way? How many of you guys are able to flip quick enough that you take a break even and you go with the side that is working? A lot of traders have a lot of difficulty flipping sides. It's very hard to do. And if they flip, guess what? Most of them flip during consolidation periods, right? So guess what? Your emotions are so high off moves like this because you missed this shit, right? Because you missed the move. So guess where you're putting on the most risk and the most amount of position, or you know, the largest position sizes. You're coming in after the fact and shopping around, going up and down, trying to figure out where this is gonna you know, resolve here, up or down. Meanwhile, you missed the real move and you're just chopping around with this. So oftentimes people flip during consolidation, you know, versus if everybody's biased to one side, and then finally you get the big reversals. How many of you guys get caught in consolidation, flipping too many times and racking up losses there? Okay,
that's the problem. You just hit that. I was just gonna interrupt you to just make that point. You just made it. Sure. A lot of people think flipping is good. You better have an idea of what you're doing if you're flipping, and you better realize when your flip was the wrong flip. And again, that's why I do not flip. I have no clue. For some reason, I have no feel off that stuff. I'm better off when I'm wrong, just sitting on my hands and waiting, like you said, for that resolution, okay, or the flow to confirm that resolution. Me, myself, you know, I just can't go call side to put side to call side to put side. Right. You know, and think about how much over trading that will incur, Lutz. You know, to some of these retail traders out there dealing with smaller accounts and so on, how much over trading that's going to, you know, involve.
Yeah, and Bill McKisson here is talking about futures here. Like, if you guys trade the ES, like ES trades like water, man. I mean, you can jump in and out of that joint, and no spread you got to deal with. You know, ticks are huge. The leverage that you get from your discount brokers is huge. And it is amazing how much you can overtrade your account to nothing extremely quickly because, again, it just trades like water. You can get in and out. They even have, like, NinjaTrader even has a flip button. Like, you can just, Jesus, did you know this? Like, if you were
No.
10 handles long, you can hit this one button on your level 2 and it just flips your whole position immediately in seconds, bro. You know what I mean? Like, you don't even have to think about it. You just fucking click this button and it flips you. And it takes the same amount of contracts and it flips you to the other side. That's what it does. It's amazing.
Wow.
It is absolutely amazing. It's disgusting at the same time because, I bet their metrics and their data teams over there are showing people hitting the shit out of that button too. I would love to see. I would love to see the numbers behind it. But like Jesus was saying with the order flow does help you clear up that bias to some extent if you are really paying attention to it. So, for example, like Friday, finally in the afternoon, there wasn't much action here in the morning. Finally in the afternoon, we got some buyers in some names that are relatively bullish, like that XOM has been bullish this whole time. Finally.
Go back Facebook. Go back to Facebook.
Yeah, Facebook. Yep.
That was the missile that set the tone.
Right. So this Facebook started it, and remember, Facebook this one's been really, really bullish. For despite the fact that we pulled back in the market. So any uptick in the market here, this is a great name now to start looking for dips. So now you have a trade idea right there, right? So now when that trade idea sets up with your market, you have a trade. That's one trade right there. This COP, for example, got a lot of activity, a lot of call buying. So there's some people looking for some solid dip buying here. You can see it start to consolidate down here. So this is another opportunity. And then you look later on in the session. You had the Google, and then there was one other one here in particular that I want to throw out there, this VRX, right? This VRX retraced the whole move up, right? So this thing is no longer at 38. Now, finally, like, this is the first time we're seeing deep in the 20s for puts here. If people just shit the bed on this one, you could get a retest down here, 25 and change. So now this is a name that, hey, if you get a point rally or somewhere, this is a good name to fade. So boom, you have 3 or 4 trading ideas right there that are backed with, smart money that is out there looking for the same thing. So again, time these things with the market and you have your trade ideas. Now, when you start taking losses and, you get biased and everything, this is when the shit show starts, right? I mean, all your decision making goes to shit. You start trading aggressively any name that you can pick, right? You might go to the SPY. You might go to what everybody else is trading. How many of you guys start, let's say when you take some losses, how many of you guys start just looking for other things to make back your losses? We all do it. Everybody does it. And that ends up digging a bigger hole for you too.
Yeah, no doubt. And that's, again, it all comes down to some sort of plan, Lucha. It doesn't have to be a written rule game plan. It's just you have to have some sort of idea what you're going to do every day, every week in this market, what you're looking for, what to wait for. If you just want to come in and trade certain names just because you like those names and you think there's going to be momentum in them every single day, at the best, you're going to spin your wheels, in my opinion. I was there. I did it. So, there has to be something you're looking for, something you're waiting for, something that keeps you in check, okay? And then once you utilize that and start grinding out profits, then you're on to something. Going back and forth and just flipping around in between names just to look to make money every day. A lot of people do that.
Yep.
They come in every day, they think, oh, you know what? I'm going to trade Facebook just because today, and there's no momentum over there, and they're flipping both sides, and there's just no logic behind that. You know what I mean? I mean, think of it logically. You're not going to make money in one of the toughest games in the world just coming in firing bullets at anything.
Right.
So, you need some sort of plan.
All right, guys. Well, let's go ahead and take some questions. Again, we're keeping it a short webinar here, just talking a little bit about the psychology here and how emotions here can push you this way or that way. So go ahead and ask us any questions or comment on, some of the issues that that you're currently dealing with in regards to your psychology behind the trade, why you're actually in the trade, and that's another thing that people just there's no real reason for them to to be in the trade in the first place. And this is a big issue for a lot of people. And another issue I would say for myself is I always have a plan, but when that plan doesn't work, my emotions start kicking in, and that's when problems start happening. This is exactly when problems start happening, and you need to be able to keep yourself to the plan, or somehow have a way of checking that bias and checking that emotions. And it's going to work differently for everybody. Everybody's mental clock here works completely difficult or differently. So you might respond more to somebody yelling at you. You might respond more to motivational stuff. You might respond to making sure you're at the gym, you're eating well, so that your mental state is on an even keel. Everybody has a different way of doing this. You have to tap into what works for you, and focus, and be able to focus during the trading day without the distractions. You know what I do, like during the trading day, bro, when there's nothing and it totally ruins my focus, bro? I hop on YouTube, bro. I hop on YouTube and I just sit there and I watch videos, and it is such a waste of time, and it pushes my focus like completely out of whatever the scope of trading, and then I'll try to come back and trade something, and like I'm not in it. I'm not in it. I'm not focused on it. So that's one of the big things.
Yeah, and the other thing too, a lot of people misinterpret the word overtrade. Okay, overtrade is not taking a lot of trades. If a trade lines up to your parameters and what you're looking for, you should fire, as long as you're, again, minimizing your downside and willing to take what the market's willing to give you on the upside for that particular day. Overtrading is not taking a lot of trades. And honestly, I would, in my opinion, okay, it's helped me out, I would suggest taking a lot of trades if you can, and staying smaller rather than being too selective and putting on big trades that you're shitting your pants about every day. You know what I mean? Yep. So overtrading could be misunderstood. As long as things are lining up to what, in other words, to what you're looking for. For me, for example, all right, if there are aggressive call sweepers, and a lot of them, I want to own them all. I don't consider that overtrading. For me, overtrading would be if I'm tailing a company that has earnings, and I'm tailing that action when I shouldn't be, or I'm tailing a name that has bull flow and no aggressive action just because I'm looking for something to own. That's my definition of overtrading. But when things are lining up and they're there, just because you took a trade or two today and made some money, you should go and keep firing if things are lined up, because that's what happens in this game, right? Everything streaks. And when you get hot and things are lining up, you should want to hit as many of them as possible. And when things go cold, you sit on your hands and you do nothing. So, a lot of people misunderstand that overtrade theory, thinking it's just too many trades.
And it literally is all up in your head, guys. I mean, once you understand how to trade and you have a strategy that works and you have made some money before, that's all you need to do. That's all you need to focus on. But it is so, so difficult for so many people to do this. I mean, you have people that have spent years just churning their accounts, not getting anywhere, but still have the belief that they can get somewhere with this particular account or whatever it is that they're trading. Like there are deep emotional issues that everybody has and nobody wants to admit to. You guys might want to start admitting to some of those things and start working on that shit, or come up with a realistic game plan on how to do it. I am trying to build one that I think is one of the most realistic game plans for most traders, is basically automation around your emotions. So, if you have X, Y, and Z issue where, you're up in a position and you take it for a loss, you never want that to happen again, boom, you click this button, that'll go ahead and give you the automation so that will never happen to you again. Or, locking in profits, things like that, that we can at least start killing your drawdowns and then continue to work on your upside. But that's down the line, and check out all the updates. St. Lucci World, Wall Street Jesus will have all that coming for you. I'd like to throw out again for all you non-members, you guys have a link there in your description, in your questions, for a coupon here, $49 for the first month. and then a rebill 199 after that. And again, inside the room too, we have an off-topic channel now that I push everybody to, and this is where most of the psychology talk comes into. So we have a nice community of traders that'll just run up in this this off-topic channel and just talk about shit that's affecting them and stuff that you know, you can talk about anything in here. So we're constantly trying to sort of curate and build this community so that we can all figure out this game together and achieve the goals that that we are setting out to achieve. So let's go ahead and take some questions here. Bill McKisson is saying, do you have after-action review and build a written plan with plan number 1 and the opposite if you are wrong for the next day? I think I know what you're saying, and try to clarify for me if I'm wrong. But you know, for example, like for next week, I'm looking to get some kind of a dip in Google and ride this thing up to about 730, possibly a little bit higher, and then as well as some of these other tech names like the Netflix and the Apple. Right now, what could set that trade apart? What could make that trade get destroyed more or less? Well, a market that is weak, right? So a very weak market. We get back to, let's say, 205, we get back to 204, you know, that's going to throw a wrench in the whole plan. So I need the market to at least stabilize and do nothing for buyers to come back into, you know, names like Netflix and things like that. I think this Netflix can retest 93, provided here this market still has a little bit of a bounce to it. You know, but overall, you know, do I think we're going to get that much on it? No. So I temper my expectations as well. So with this Google, like I just want to be able to rip a couple points on an option, and that's it. I'm not going to go balls to the walls here. The Facebook is a little bit more interesting because you have the possibility of some buy programs that'll kick in and all that kind of stuff. Like these after earnings plays sometimes get pretty rowdy. Like, so this Amazon too, you know, this thing looks to me just like Facebook does, just a little bit different. And this one's not at all-time highs yet. So this is another great trade. If all of a sudden market gets bullish, you know, I'd be looking for something like this. But, you know, what do I want to be able to do on the downside here is that if we get some serious downticks in the market, you know, I'm either sitting out or waiting for another opportunity to maybe get a larger dip. And that's the other point. You know, you don't want to preempt this stuff. So you don't want to just come in Monday morning and just buy everything. You know, it doesn't work like that. It doesn't work like that.
You want to have an idea, Bill, like Lucci's explaining, that's the perfect plan, okay? And I don't know if you're familiar with that time when IBB court action. It was the same exact setup in a sense, all right? Yep. IBB court action, aggressive sweepers that late Friday. All right, and Lucci stressed in the room to members, and we spoke about it a bit, that Monday morning, if any weakness, he's looking at IBD for an opportunity to the long side. Yep. And what happened? Monday morning there was weakness. IBB held up a little better than everything else, and then buyers came in, the flow confirmed. Lucci jumped in and scored in IBB. Right. So, you know, he had the plan already mapped out. He said, he's coming in Monday morning, and he's going to watch this IBB trade, wait for some flow to confirm it, see how it holds up, and if it all lines up, boom. And that's what happened. Right. So that's what he's stressing with Google. Hypothetically, we're weak Monday morning, okay? He's eyeing Google. See how it holds up in the rest of the market. See how the FANG names hold up in the rest of the market. Watch the flow. You know, we see some buyers coming into weakness, and Google you know, looks decent to him, he's going to jump in and try to wring out a couple points on the option. So, you know, that's a plan. That's a plan right there. I mean, what's the plan if he's wrong? Very simple. If he's wrong, he's just going to minimize his downside, admit he's wrong, and move on.
Just table the trade. Yeah, just table the trade.
There's nothing more than that, but at least he has an outlook. He's already prepared to know what to look for come Monday morning. And that doesn't involve a trade. That's just an idea of what to look for to map out a trade in Google.
Right. We got Wen here saying IBB pulled back to support zone. You waiting for Bazooka Joe action to get back into the long. Let me tell you something about IBB support, bro. IBB support is as good as what's a really shitty support, tech support, you know, for a company. Support, you know what? It's as bad as Bank of America customer service. That's what it's as bad as. Comcast, there you go. It's as bad as Comcast support. That's a good one right there, Wen. All right. So as far as IBB, I mean, dude, she does need a bounce no matter what. You know, these things always do bounce, but guess what? Like anybody who's tried the bounce trade, you know, over the last couple of weeks, like, look at, come on, man. We're in like a
Yeah,
quasi bull market here. This thing dumped 40 points. Like, this thing's a piece of shit. If you're going to bounce something with some balls. Like, bounce something that wants to be bounced. Bounce something that people want to buy. You know, and granted, you can get some solid action in dog names and stuff like that. But dude, these names are bad. These names are really bad. This Gilead, though, it's interesting. It's gone a lot. So when it does squeeze, you know, it'll run up
they,
pretty
they,
quick.
they annihilated these things. It's amazing. But, you know, and that's biotech, guys. That's why I hope you're talking about for a day trade, first of all, because swing trading biotech, you really got to be careful. I mean, you see some of these things, they're down, you know, 30, 40% overnight. So biotech is a little tricky. And the thing is, listen, and that's fine. If you're looking at biotech and things are lining up and you're looking at some sort of support that you believe in, okay, yeah, you wait and see if the flow can turn, if there's some aggressive action, you can go ahead and fire a day trade, limit your downside just in case it's wrong, especially in that. But again, if you're talking more of a swing, you got to be careful in biotech land right now. You got to be careful.
Indeed, indeed, indeed. All right. Any other questions here at all? Again, we do have a coupon code here for you guys for the new members here just to get up in the room and check us out. $49 a month. You get access to private Twitter as well as a pretty cool mobile platform here. You know, it works really well on the mobile, so if you're on the go, boom, you just click this side icon. You can get all the alerts here in real time. And then the chat room where we have futures traders, options traders, equities traders, a lot of different kinds of strategies, and they all take the order flow as a good way to gauge, you know, sentiment, where the money is playing, and if they should be aggressively playing the market at all. Now, the only question is, are you paying attention to it or are you not? We do stress that, of course, all of our members do. And we're continuing to build out the team, the development, the programming, as far as how we get these alerts to you, and more content down the road that can help you out. I think Jesus and I right now are working on, you know, getting you guys some updates after hours on open interest changes.
A lot of good things coming.
Yeah, a lot of good things, a lot of good things. All right, so any other questions here? Any other questions at all? Again, recordings of the webinars, they're all on YouTube, slash Sanglucci. Braden here was saying, staying off Twitter keeps me in check fairly well. No social media equals clear thinking. You know, absolutely, man. I mean, you know, it's true. It's true. It really is true. Tim Saucier is saying, you may have already mentioned join late. Is this recorded? And if so, yep, the YouTube channel. I'll send you the link right now. Jesus, any comments before we let him go here?
No, just, again, I appreciate everybody coming out on a Saturday, and I just want to stress, you know, because a lot of new members really come into the room and, you know, they just have different expectations, and I want to make clear what we do, and it's basically this order flow, guys, is best used and most efficiently used as an indicator, okay, an indicator of momentum. You can get a gauge of how the aggressive money is positioning in the option market. All right, it can tell you what's weak per se, what they feel is stronger or has relative strength as opposed to everything else. And an example of that Friday, a lot of the put action, all of the put action was in biotech land. Okay, I mean 90% of those put flow alerts that were on that tote board were all related to biotech. And then we see some nice buying come in to names like Facebook, some tech names, HIMX, another semiconductor name. So it gave you an idea that the market actually was going to hold on to its gains just to, if you wanted to stay away from biotech and focus elsewhere. So that's how you have to come into the room, the steam room, and I guess utilize this information. You can't look at every alert as a trade. It just doesn't work that way. All right, so I just wanted to, you know, give the guys the heads up that come in just to have different expectations. A lot of people come into other rooms, and granted, that's what they're offering, you know, stock picks, and that's not the case here. All right, it's a little bit more. It's learning how to read and interpret the order flow and to incorporate that into your own trading style. So Who's saying good luck with my Derby pick?
Yeah, who you picking here for the Derby? They all want to know, man.
I got 3, 4 horses. I got to narrow it down. There are a couple of them there. You could see here, I have my screen up. If you want to switch screens, Lucci, for a second, so they can get an idea what I do on a Saturday morning here. Yeah, you could see here. I'm really racking my brain here, handicapping this morning. I like this Whitmore here. There are a couple other horses. I'll post them on Twitter. But this is a tough race. A lot of good horses in this race. You got that Nyquist, who's just a stud. This horse right here. He's going to go off the favorite in the race, so it should be interesting.
This is how you analyze all this shit. Is like, see, but you can't see the jockey. Like, you can't. Do you know about the jockey through all this stuff?
Yeah, of course I know. Oh,
you do. Okay.
You don't know horse racing, huh, Lucci, at all?
I don't
of course I know that.
I just remember that scene. I just remember that scene from Metro with Eddie Murphy, and he was just looking at the horses and seeing what the color of their the coats were. Looking at the jockey, looking at the owners and shit, and he was he's like, we're not even gonna go for this horse because he don't even want to race today or whatever. Like, he was just sitting there talking shit.
Let me tell you something, okay? This is my vice. In other words, instead of losing the money in the stock market, just throwing money all over, this is where I lose the money, but on a little smaller scale, thank God. But this game is impossible, so I can't pick a winner if you put a gun to my head, so don't listen to me. But, it's fun to handicap, that's all.
All right, guys, take care. Thank you for joining us, and again, you can get the recordings on YouTube, and we'll see you next Saturday for the next sweep webinar. Later, guys.
Definitely. Have a great weekend, everybody.